Hello traders, Gary Wagner here. It is 2:54 in Honolulu, 8:54 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 16th day of September 2022, and this is the daily report for gold and silver, our weekend review, and what a week we have seen. An absolutely and critically important week, with the selling pressure continuing, breaking below $1,680 on a closing basis for the first time in the last couple of years. Gold recovered slightly, gained $7.20, and after hitting a low of $1661.90, closed at $1684.50, effectively back above that line in the sand that I have talked about on numerous occasions. Now, the decline that we've seen recently has not been as much related to a dollar weakness or strength. The dollar has had fractional moves over the last 3 trading days, with the index currently at 109.665. Silver also had a pretty strong day, gaining 1.8%, and the September contract is currently at $19.61.5. In March of 2020, gold, for the first time since hitting $1,000 and then moving higher, did we see pricing go above $1675 to $1680. On this instance, of course, it failed. However, as you know, support and resistance are part and parcel of the same thing. You can look up at the ceiling, resistance, or be on the second floor looking down as support. And that's what we're looking at here, because resistance quickly became support, and for about 45 trading days, gold found support at $1,675. We have labeled that area simply as support 1. Now, prices did oscillate from there, trading to a high just above 2,000, and then in March and April labeled support 2A and 2B. We once again tested this area and determined it was key and critical support. The flash crash is labeled as support 3. In July, that price point again served as a strong area of support, labeled support 4, and that takes us up to the activity over the last few days. For the first time in 2 years, gold closed below $1674 to $1680. Another way to illustrate that is through the use of a line chart. We'll do it in 2 different manners. This is a line chart based upon closing prices. Then we'll look at a line chart based upon the high or close. It is obvious that this area that we have been looking at has held strongly for about 2 years. We also can see that yesterday we saw gold close below that. Now, when we change this to a line chart based upon the close or the high, it looks quite different. By converting the line chart to be based upon the closing price, what we see is that we did get a slight recovery, and we are back above this key and critical level, which tells me that we might have one of the best opportunities for a substantial trade next week if we get a solid open and the price point stays above $1675. We'll look at the open in Australia very closely, and if appropriate, send out a trade alert to enter gold from the long side. This is Big Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.